Hello, I am Michael Kutch at HBK Provident Advisors. Usually we just do the video format for webinars or our normal Friday Live schedule, but given that I haven't been on Friday Live in the past 2 weeks, I figured you guys probably missed my face. So here I am to give you a visual version instead of the normal Monday blog post. So going to the blog post real quick, this is the typical thematic nature of it, Market Monday, which this video is taking the place of Tax Tuesday. Brian has been doing a campaign very well with that. Some very good tips and tricks. Wealth Building Wednesday, Think Ahead Thursday, and then Friday Live. We also have our webinar on Wednesday, which is the 2026 Outlook. I'm hoping I will be a part of it, but if not, you are in good hands. So this will just kind of be a condensed version of that. I'm just going to stick to the economic data and the markets. So what's been going on since the start of the year? Markets are essentially flat. We're up about 0.5% over the last 2 weeks, really closer to that zero line. The dynamic's been very interesting, though. It hasn't been the Mag 7 that's been carrying us. It's been more internationals doing well, both developed and emerging markets. Small caps are doing well, even though they gave back a little bit late last week. Industrials, regional banks, materials. On the flip side, though, comm services, tech, and the big banks have not been doing so well. So let me pull up the chart right here of the S&P 500. I got to remove this one first. Sorry, just bear with me. So as I said, we're essentially flat. We did have a big uptick in the 10-year treasury, and that had a lot to do with the rise in the Japanese bond yields. There were some rumors that Trump was trying to replace their monetary and leader with someone more dovish, causing the dynamic going on. And we also had a little bit of an uptick in the long end of the treasury curve, given the dynamics of us trying to acquire Greenland and then the tariffs that were associated with it. So we did get PCE this week. Both headline and core came in at 0.2%, 2.8% on a year-over-year basis. So still elevated. I think that's likely going to be sticky, especially if we do get any sort of real accommodated monetary policy, which I have mixed feelings because I think the economic data is mixed, and I'll go into that a little bit, but I think the Fed's on pause really until we get a new Fed chair, and the dynamics with that has actually shifted quite a bit recently. Kevin Hassett was the favor, but now Rick Rieder is moving up the chart, and I got to admit, I'm a Rick Rieder fan. He is my second favorite fixed income guy. Sorry, Rick Rieder. Jeffrey Gundlach has my place as the bond king. But going into the economic data, employment situation, non-farm payroll has definitely been slowing. Came in 50,000 for the month of December. I think we're likely going to get some readings in the 0 to 50,000 range, maybe even going negative. We did see an uptick this month in wage growth, went up to 3.8%. That may be short-lived. The readings going into the end of December showed that real income X transfers was pretty low, about 0.5%. So not that great going forward for wages. Also, the hours worked over about the last 7-8 months have been essentially flat and actually declining in manufacturing. So not necessarily a good thing. On the ISM front, services has been strong. The highest reading we've seen in a couple of years. That was a reading we got, I believe, last week or the week before. The flip side, manufacturing has been on a little weaker side. We did get the PMI numbers this week, which they're decent in the expansionary territory, but they're pointing more toward a 2% GDP level rather than what we've been hearing about the 4% level. Besides that, this week we have durable goods, which is expected to see a nice rebound. Besides that, I'm just trying to think if there's any other. Oh, well, obviously the FOMC meeting is Wednesday. That's always something to watch. Although I don't think we're getting a rate cut I think the odds of that are virtually zero. It's always important to see what exactly Powell will say, especially coming down to his last few meetings. I don't know if if I know Powell at all, I doubt we'll really get any curveballs. Let me just check my notes if I was missing anything that I really wanted to cover this week. But like I said, we do have the webinar on Wednesday at 5 p.m. So make sure you tune into that. On the fiscal side, tax refunds are supposed to be pretty robust this year. The average refund is expected to be between like $500 and $3,500, and that has a lot to do with those the raising of the SALT deductions. And then we also get PPI this week, which is expected to be a little closer to 3%. So we have some room to make up to get back to all-time highs. The expectation is high for the year, even though we have some monetary and government stimulus potential. Earnings growth is expected to come in at 14.8%, and we're trading at about 22.5 times earnings. So the bar is pretty high. It's going to be pretty tough to get above those thresholds, but we will keep you tuned. I'm thinking more of a consolidation week. We're sitting right above the 50-day moving average. Momentum's been a little on the light side, so we could see a potential dip below that. But if I had to say one way or the other, I think we'll kind of stay around this level, and then we'll keep you up to date. Whether I'm on Wednesday, Friday, or do another video like that, I'll be filling you in shortly. Before I go, I'm going to flip on the disclosures, and then I hope everyone has a great week.
Securities offered through LPL Financial, LLC, member FINRA, and SIPC.org. Advisory services offered through LPL Financial, LLC, a registered investment advisor. Brian Peluso, Michael Kutch, and David Harper are registered representatives of LPL Financial, LLC. Content discussed is for informational purposes only and not intended as an offer or solicitation to buy or sell any security or investment strategy. Any opinions expressed are those of the authors and do not necessarily reflect the views of LPL Financial or its affiliates. All investments involve risk, including the possible loss of principal. This communication may include links or references to third-party websites. These links are provided as a convenience only. LPL Financial and its representatives are not responsible for the accuracy or content of such sites. Brian, Mike, and David and HBK Provident Advisors may only transact business in states where they are properly registered or exempt from registration. Please contact us directly for information regarding licensing and registration status. Past performance is not indicative of future results. You should consult with your financial advisor, tax professional, and/or attorney regarding your specific situation before making any